Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic week this week. If you are anywhere in the Southeast United States, I do hope that you have battened down the hatches because that hurricane is a coming. Let's get things going with high probability short term profits. We're going to start out with a quick market review with Mike. Then we're going to go down our portfolio, and I will say that it does look pretty good. We think it's 30 or 18 straight wins. No, 38 out of 41 wins. Last show's trade, we're going to go over that as well. GLD C3AI. We're going to talk about a current trade that we have coming for you this week. I won't tell you what that one is quite yet. I'll let Mike spoil that one for you. And then we're going to go over some audience stocks as well. Mike, how we doing, sir? You just finished feeding the monkeys, and I hate that nobody else saw it.
They were just here. Yeah, they're not here right now, but yeah, they came and I fed about 5 of them and bananas. They like bananas. Monkeys actually eat bananas.
Would you say that they go bananas for bananas?
Monkeys are bananas for bananas, man. Yeah.
How I'm not going to quit my day job. I'm doing pretty good. Doing pretty good. Just getting ready for this storm to come through.
Now you're in South Carolina, so you shouldn't get the brunt, right?
Yeah, it shouldn't hit too hard, but we're going to get a lot of rain and some wind as well.
Oh.
Yeah.
Batten down your hatches, brother.
Yeah.
All right. Speaking of battening down the hatches, the S&P 500, as I speak, is at an all-time high. Now, there's some news came out this morning. We can put that up real quick here, Ryan. The jobless claims number came in at 218,000. These are people that are filing unemployment insurance, and 218, it was expected to be 224. So the market this week was a little bit choppy, going sideways, waiting for this report and a few others. And this is really pointing at the job market is stabilizing. It's not getting worse. Joblessness or unemployment is not increasing. And that's really good news for the market. There's still this fear about, are we going to spin into recession? And the jobs claims indicate, at least it's been about 3 of them straight in a row, where the jobs market seems to be firm. As Powell said last Wednesday, he pointed at a stabilized jobs market. And then the other report that came out this morning was the gross domestic product, and that number came in as expected. And prior, it was at 1.6%, and it came in at 3% as expected. So the economy is strong. The jobs market is firm. The markets are liking it, and the markets are heading up. Let's go into CNBC and see what the futures are saying here. The Dow futures are up 0.52%. These futures trade round the clock from Sunday to Friday, Sunday night to Friday night, and already we know the Dow's going to open up about a 0.5 percentage point. The S&P 500 darn near close to 1%. And the NASDAQ's up 1.69%. Why is that? We're going to find out here in a minute. Let's go look at some charts here on the Hub software. You can see here, this is a chart of the SPYs. This is the ETF that tracks the S&P 500. And the SPYs broke above this 565 level I've been harping on for ages. And we've been sort of going sideways, dancing sideways, presumably waiting for this jobless claims number. The number is really good. And currently, let's take a look. We're going to open up here around 574. So we've gapped up this morning to all-time highs on the S&P 500. The NASDAQ is another that's also not at an all-time high, but getting close. The NASDAQ will open up higher this morning as well, clearing this 485 resistance level. Follow that little fist on the screen there. That's 485. All right, I'm going to get evangelical. That's what I do. Resistance at a round number. Resistance at 485. Falls away, comes up here, post-Fed announcement. It gaps up. It touches 485, falls away. Touches 485, falls away. Yesterday, a slight close right above 485. And this morning, we're going to see the Qs breaking through this resistance level and further upside expected. So across the board, I am personally bullish on the market. We got a big rate cut last week. the Fed is likely to cut rates again by the end of the year. And then 2025, presumably, if the data supports, will have the markets rising as interest rates are cut through the balance of 2025. So all of that is really, really good news for the markets. Bullish. I'm bullish. Doesn't mean it's going to be correct, but that's how I'm seeing the markets, and I just want to share that. All right, now, Ryan, our win streak is over. We topped out at 18. We're in this trade on AI here. This was a bearish credit spread. By the way, if you wonder what I'm in right here, I'm in Tom's Tools. And a lot of you are subscribers to Tom's Tools. If you want more information about it, you can visit my website at mwtradecoach.com or go to Tom Gentile, tomsoptionstool.com, and you can find out more about the software. But what I like about it is it allows me to generate pictures of my trade. So this is the trade. The rules on these are quite simple. You take these trades off for a loss if the stock closes above, in this case, a short call, 2350. We got in down here, and sometimes this happens. Really bad news, lower in future guidance, et cetera, et cetera. And then the stock recovered and danced with this line here, which is 2350. And then on this day, which happens to be the 19th, we took it off. We took it off for a loss, a managed loss. We lost $100 or so, $110, but we could have lost a whole bunch more. And in fact, I'm going to take you to the next day when this thing expired. So had you waited till expiration on the 20th, in this particular case, the stock dropped back down, and that would have been a max profit trade. So now, does that mean getting out at the short strike is a bad idea? No, because nobody knew the stock was going to come down the next day, and then it could have come up here, and we've lost a whole lot more than $110. So that was a loser. And we had a winner last week. This is not quite off. It should come off today. This is the gold trade we placed last week. We got in here. The stock skyrocketed up. We're right at our GTC order to buy the spread back for a penny. All right, so that is a winner. And by the way, let's go take a look at gold, because gold is setting all-time highs as well as I speak. Look at this gold chart. It's just nuts. Gold is off to the races and seemingly has a higher upside from here. Most are expecting 250 as the next limit. This is GLD, the ETF that tracks gold. And I would say 250 is the next target on gold. Now, we could do another gold trade today, but I have another that I want to talk about. And seemingly is the reason the NASDAQ is up so much today. Look here at the NASDAQ, again, is up 1.69%, and the markets are opening in 6 minutes. So I want to talk about Micron. Can we get that graphic up there, brother, for Micron? Micron is an AI chip company, and they blew out their earnings. They're already up 17% pre-market, beating analyst estimates of 1.11 earnings per share. So they beat the 118 estimate. So they beat earnings, and then they raised their future guidance. It expects first quarter revenue higher than the estimates of 8.3 billion. So they're expecting 8.7 billion, and it was expected that it would be less than that at 8.3 billion. So that's the perfect kind of news for these trades. We want earnings to beat the expectations, and then a lifting of future guidance. And that's exactly what Micron did last night. Now let's go to a chart of Micron. Let me hop into the watch list here for this show here. I keep a little watch list here. And as Ryan says, if you're looking at anything else, let us know. We'd love to see it. So here's Micron. Let me reset my template here, so it's a little more clean. All right. So support resistance is our thing, right? Micron is currently trading up here around 107. And how do I know that? Well, I've looked at a lot. Well, we can go to Thinkorswim here really quickly, and I'm going to show you the live price on Thinkorswim. So it closed yesterday at 95.77. And as I speak right now, the stock is at 112.50 cents, $112.50. And that puts the stock in a really beautiful spot. So let me just give you a quick showing of where the stock is now. So the stock's trading right here at 112. All right. Now the game here is how close do I want to get to the heat of the stock? I want to make money above a line in the sand, I call it. So with the stock trading at 112, you could say, all right, this 110 level here was super strong resistance, support. So that level would be as close as I'd want to get, but the stock's 2 points higher. So I would rather, let me get rid of this line here because it might be confusing. I would rather drop my line to no closer than 105. Why? Well, 105, support was broken there. That's a key level. That's a support level. Now it was a resistance level. Now with the stock trading up here at 112, that becomes a support level. And what makes it an even stronger support level is that this blue line here is the 200-day average, which is a really strong support resistance line. Indeed, you can see it there. The stock bounces right or stops dead on the 200, retraces, comes back, bumps its head up against the 200, and then busts above it, and then comes down and bounces on it again, and then cracks below. So that level is an added layer of protection that could very well keep the stock from dropping below this 105 level, already a support level in and of itself. So I like that level. That's as close as I would get on this one, but I'm going to do something even more conservative. I'm going to drop my line in the sand down to 100. And with 2 minutes to go, I want to see, can we get anything down there at 100? So just imagine this for a sec. The stock is at 112, and we have a line in the sand down here at 100. So what that means is for us to lose money on this trade, the stock will have to break below 110, which is a support level now, and the 200, which is a support level, and 105, which is a support level, and then it can get down to 100. So we got 3 levels of protection, keeping the stock seemingly above this 100 level. Couple that with raising future guidance and beating on earnings, this stock has very little reason to come down, although it could. So this show is called High Probability Short-Term Profits. So the high probability here is 1, great earnings. Institutions are jumping on the stock. It's already gapped up 17%. Institutions love it. Stock seems poised for further upside. So that's one piece of news. And then just the sheer probability by putting a line in the sand so far away from the stock. The only way we get in trouble here is if Micron tanks. Well, why would it? All right, so that's the probability part. The short-term part is that we like to use short-term options. And I'm looking at the October 11 options. They expire in 15 days. That's 2 weeks. We have Saturday and Sunday of free time decay. So entering these on Thursdays has the added bonus that on Saturday and Sunday, when the stock can't move, we're going to make money on time decay. All right, so the market's open. Let's go after this 99-100 short put spread. I have it down here. The order is to sell 5 of the Micron October 11 100 puts. Also in the same order, buy to open 5 of the Micron October 11 99 puts, and I want at least 10 cents. I can see 17 cents here. Now it's dropped to 6. Darn it. See, that's what I get for. Okay, it's at 13 cents. Let's go ahead and try to get 13 cents. Confirm and send. And then I'm going to watch this price here. I'm not going to get too greedy because that price will be gone soon. Let me drop it to 12 cents. Don't get greedy. I'd take 10 cents on this sucker. Let's go to 12 cents. See, I'm moving fast. And the reason we start the show this early in the morning, 15 minutes before the market, is so that we can catch this premium before it dries up. I'm going to take it down to 10 cents and just get in. I got it. I got it for 12 cents. Let me show you what I just did. Here's the order. I did the October 11s. Let me change this to the correct date. And I just got 12 cents. Beautiful. So here's the order then. Sell to open the Micron October 11 100 put. That is our line in the sand. We make money anywhere above 100 on this trade. And then buy to open the underlying put. Same stock, same expiration, and that's 99. We just got 12 cents. And that trade is in the can. Now, trading is about risk management. The outcome of good risk management is profits. So most look for the profits and they handle risk management after. If you want to be a successful trader, flip the battery in backwards, become committed to risk management, and then allow the winners to take care of themselves. So you'll notice here our loss exit is very simple. If the stock closes less than 100, let me show you where that line is just so you can see it graphically. If the stock closes below 100, let me reset this chart so I can see where Micron is. I'm going to change charts here. There we go. So Micron, look where it is. Man, it's at 114. This is just a beautiful trade. Now, the stock is above 110. As I said before, that's a support level. So 110 will likely hold the stock. It might not, but it should. And then we have 105, the 200. That is also another layer of protection. And then our line in the sand is way down here. So bottom line is, as long as Micron can do anything up, sideways, and even down $14, up, sideways, and down no more than $14, and we're going to make some money on this trade. And I imagine that this credit will dry up very soon. Indeed, already. You can see that it's dancing with less than 12 cents already. So this trade is already beginning to make money in just a couple of minutes that we've been on this call. So Ryan, that looks like a good one, brother. Oh, the other thing I just want to quickly say is we can take a look at the NASDAQ as well, because Micron is bringing up tech. Micron is bringing up the SPYs. Here's the SPYs live chart. The SPYs are rocking and rolling up here, all-time high territory on the SPYs. Nice, well above 570. And then the Qs, let's see where they opened up today. Wow, amazing, amazing. Money's flowing back into tech. Micron is going to lead the tech sector up. Let me just give you a better view here. So this is a level I was talking about here, right at 485, and we are well above it now. This is all-time high territory right up there, and the NASDAQ looks poised to test all-time highs. Micron's up. Let's check NVIDIA as well. What's NVIDIA doing? NVIDIA also broke resistance. It's got resistance at 130 as well. So tech is hot, y'all. Tech is hot. Let's look at the semiconductors. SMH. SMH is semiconductor. It's the semiconductor ETF. It looks a lot like the NASDAQ. And tech, semis has cleared this 250 level. So keep an eye on tech, y'all. Now keep an eye on tech. Micron has set the table for a bullish run in the tech stocks. It's exciting times, Ryan. Bullish prognosis across the markets.
Indeed. Indeed.
Yeah. We have any stocks to look at from our lovely community members?
I'm seeing from Paul Reese says, suggestion for VST put at 100 or at 95, depending on whether credit is there.
All right. Let's go take a look at that. VST. Let's go pull up the chart here and see what it looks like. I'm going to check the news as well. It's important to know credit spreads. You don't have to trade them the way I'm trading them. This is just a system, right? It's one of many ways to trade credit spreads. We also have the AI signals from Hub that we play with on Wednesdays, and we can look at those as well. But here's the stock, Vistra Corp, and certainly it's off to the races, right? Really big run. So what I would want to do now is say, well, I would rather have caught it here. Something happened on this day right here. You see how the stock gapped up to 100 and then kept going? So we've kind of missed the party, I'm guessing. But let's go take a look at the news and see what's underneath this sucker. I'm going to go to finance.yahoo.com. You can get news anywhere. Most broker sites, plenty of free places to get news. I'm just using Yahoo Finance because a lot of people know about it. Let's see. Nuclear stocks investors can't overlook. Cameco, CEG, VST, market returns. I don't see any news for today. I like the stock. I like the performance, but I'd want to catch it. I would have rather have caught it on this gap, on some good news. In fact, I'm going to see if I can find out what happened on that day, and I'm going to go into Thinkorswim's news because it's a bit more granular, and I can go right to certain dates to see. So that's the date there. That was 9/19. Let's find out what happened on 9/19, and let's see if we got. There's no earnings on this one. Earnings is expected to be November the 8th, so we don't have earnings to worry about. So it looks like, they're repurchasing $1 billion of stock. All right, that's a good piece of news. It puts buying pressure on the stock, but that happened here, and I think it's too late. All of that riffing, it's too late for me to trade the sniper way, which is news backed, which is gaps. We like the gap stuff. Usually after earnings is when we take these on. And this one to me is doesn't have enough probability. But if I was to do something with it, here's how I analyze these things. And I have a community of traders over here at Michael Wade Trade Coach, MW Trade Coach, mwtradecoach.com. And I always teach them, when you put up a chart and you're looking over here, go to the left. Where was the last pivot point? Here. And that's at 105, almost exactly. In fact, let me edit this trade and set it exactly at 105. Round number, increment of 5, multiple of 5. And that's normally where you're going to see resistance at these round numbers. All right, so had I caught it here, I would have been really super happy. And you would have too, had you gotten in, because the stock has already risen. But that was the day to do it. Repurchasing $1 billion worth of shares. The company's doing that. And the stock, all that buying has propelled the stock to higher heights. So if I was to do anything with it, I wouldn't sell a credit spread any closer than 105. I might even consider 100 right here. So that would be interesting at 100. Let's go take a look. I can't help it. Let's see what's at 100 here. Yeah, there's no credit at 100 for 15-day options. There's not even showing a credit right now. So I think we've missed this one. I wouldn't take it. It's certainly not a sniper candidate, but it's a good-looking stock for sure. Any more, Ryan? Do we have any more? There's actually quite a few stocks that have gapped today.
First, Lynn is asking if you can repeat what the MU trade is.
Yeah. I got it right here. Sell to open, Micron, October 11, 100 put. Buy to open, same stock, same expiry, 99 put, get 12 cents. Let me see what it's going for now, though. Let me resubmit this order just to see what the current going price is. Yeah, it's still, you can probably still get 12 cents. It's showing a 12-cent mid, so that this price here appears to be available. Micron. Cool. Yeah, man.
Cool. And then one more for ACN.
Accenture. Let's take a look. Accenture. Let's pull up the chart. Oh, baby. Why did Mike say, oh, baby? Well, there's a gap. The stock is just above 360. I like this one a lot, at least technically speaking, because we have this 200-day average here, this blue line. And look what happened just most recently. Bounce, 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 bounce. And the 50-day average, the red line, is about to cross above the 200-day average, the blue line, and that's called a golden cross. It's oftentimes a good indication that the stock will run higher. So I like this one from a technical perspective, but let's go check the news on Yahoo and let's see what the news is. Obviously, something happened today. Earnings beat, dividend boost. Ba-boom. I love this one. Following fourth quarter beat, revenue and profit beat, 20 billion in new bookings, dividend and buyback boost. So dividends, incidentally, there are companies that pay really good dividends, and when they raise their dividends, it attracts stock buyers. I love this one. I love it. Was that Lynn that brought this in? Ryan?
No, that was looks like a BCZX11BC.
All right.
Not sure who that is, but
all right, let's see if we can get something at 330. Why? Well, the 200-day average, it's below the 200-day average. Let's see what's there. Maybe, and Gerardo, if you're watching, I'd like this one for you too, buddy. Let's go to Accenture here. And we got October 11 options, 15-day options. That's ideal. And I would like to sell at 330, please. Let's see what's there. I don't know. We have to look. 330. Ooh, yeah, man. Look at this. There's a 2.5 point spread. 40 cents credit. I want 25 cents. It's given us 40. Yes, please. Let's go see if we can get 40 cents on this sucker. Confirm and send. And I'll work the slippage a little bit and see what's happening here. It's not giving me 40 cents just yet. So I'll drop it to, and what you could do if you want is just drop it a penny at a time until you get filled. And the reason that you want to do that is these credits will dry up in the next half hour. So every minute that passes, all that extra fervor for the option starts to dry up. I'm going to take it down to 35 cents. Not going to get greedy. Oh, now it's down to 17 cents. All right, we missed that one, but don't worry. We're going to go ahead and put this in for a credit of 25 cents. Where's he getting 25 cents? Well, it's 10% of this spread width, 330, 327.50. That's $2.50. 10% of that, 25 cents. Stick a hook in the water, confirm and send, and then just let that breathe. Now, I don't want to go any higher, I don't think. Let's see. I would go maybe up to the 200-day average. That looks like that might be 335. 335 is a little bit higher than the 200. Yeah, so the 335 is right there. Zoom in a little bit here. So 335 is worth considering. We do have protection right underneath here at the 200 that keep us from losing much if it does close below that line. So let's lift it up to 335. Let's just see if there's any credit there. I'm going to cancel replace this, and I'm going to bring it back up. Actually, you know what we can do here? We can also try 332.50. I can see there's no credit. 335 there is. No, still not enough. Let's leave it as it is. And I'll give you the trade here in the spreadsheet so you can see it. Accenture October 11, 330s. Okay, so Accenture is a stock symbol is ACN. And then we want to sell the 330 puts and then buy the underlying puts, which are 327.50. That's 2.5 points. 327.50. And get at least 25 cents. And then follow the rules. All right, here's the order then. If I can type Accenture correctly. I think that was an autocorrect. So sell to open, Accenture, October 11, 330 put, buy to open, the 327 put underneath, Same stock, same expiration, of course. Set your net credit limit to 25 cents and see what happens. This one will fill perhaps if Accenture drops a little bit. You can consider lifting it up a little bit to maybe 335 if you like, but that's not giving us much more credit up there anyway. So I'm going to let this one sit. It's a hook in the water. We'll get it filled. The trade will come to us. We're not going to go chasing this one. And then once you're filled, of course, set your stop loss. If the stock closes less than the 330 put, that's your line in the sand right here at 330. You move it. And you make money anywhere above 330 if the stock does break through all these support levels and closes below 330. Take it off for a managed loss. And then lastly, on both trades, put an order in, a GTC good till cancel order to buy the spread back for 10% of what you sold it for. In this case, we would buy it back for 3 cents, good till cancel. That profit stop handles your profit exits automatically. And therefore, all you got to do is keep an eye on the stock. And as it starts if it does break down and gets to a point where it's about to close below 330 or is below 330 towards the end of the market, close it down before the market closes. All right, so I usually start looking at these around 15 minutes before the market closes. And if the stock looks destined to stay below 330 by the close, I close it out, buy it back for a debit, and lose a managed amount of loss. Okay, Ryan, we got to talk about our guidebook, don't we? We got a guidebook, and it's free. How much does it cost? Nothing. It's free. I wrote it myself, so I think it's good. It's a 5-step process that takes you through how to find candidate stocks, looking for gaps, deriving your support resistance levels that I call lines in the sand, how to build a credit spread, and how to manage the credit spread. It's graphical. It's step-by-step. So you can there's a link below, grab this free book, and then join Ryan and I every Thursday at 9:15 a.m. on the Hub channel. That's a wrap for today, everybody. Thanks for joining. Much love. We'll see you soon.